Forex Focus brought to you by IG. Really interesting trends that we're going to draw on here today as we get ready for U.S. inflation coming out on Tuesday at 8:30. And you'll remember that last inflation from the U.S. came in actually a little bit higher than expected at 5.5%. They're expecting this time it to be about 5.3%. So really hugging that 5% number here in U.S. inflation, and people really wondering, and I think using this 5% number as an inflection point as to if we print closer to 6% or beyond, maybe inflation is coming back here. If we post closer to 5% or under, maybe we have, and the U.S. Federal Reserve has inflation under control. As you see, it is off of its highs from last year, but we did see an uptick in the last inflation reading. So a lot of people will be watching this one and will be looking to trade markets like Euro USD here in the Forex world, because the last inflation reading here in the U.S. coming in higher than expected did kind of turn around this market, or at least it came at a time where the euro was near its highs against U.S. dollars, and since then has fallen about 250 pips. Now, why does this occur? Well, you'll remember that the way that things usually trend in terms of the economy to inflation to interest rates and then on to foreign exchange markets is if the economy is moving fast, money is moving around, businesses are growing, prices for goods and services are increasing, inflation is high in that fast economy, and a central bank will usually hike interest rates to try to bring that inflation down, slow that economy, and contract that money supply until the economy normalizes a little bit. Well, in there, somewhere around probably the interest rates being hiked, you will see sometimes, and you have here recently, a positive correlation between those higher inflation rates, those higher interest rates, and an appreciating currency, especially like we've seen in recent years here, the U.S. hiking interest rates much faster than the Eurozone or the UK, or obviously Japan, who hasn't hiked interest rates at all. But we've also seen some of this action, this high inflation, cause a little bit of a flight to quality to U.S. dollar. So two reasons here for high inflation being positively correlated with a U.S. dollar appreciating among its major currency pairs. Of course, these trends can go the other way. They can flatten out, whatever you want to call it. But this is what we've seen in the last about 18 months since inflation has spiked higher across the globe. And particularly here in the U.S., as interest rates have risen drastically here in the U.S., and U.S. dollar demand has also risen as well, because you'll remember when inflation was near its highs, when it was way over 5% in the middle to end of 2022, the Euro USD pair fell all the way down under parity for the first time in more than 20 years. So that's huge US dollar appreciation. And then if you go further back in time to around the start of 2022 or earlier than that, when inflation was well under 5%, closer to 0% or 1% or 2%, Euro USD was well above 110. In recent years, this market's been above 120. And right now we sit around 107, 108. And I think a lot of people are watching to see if this inflation comes in over 5%. Maybe U.S. interest rates spike even higher, sparking some more demand for U.S. dollar, and this Euro USD market trends lower once again. If we see a normalizing economy, inflation coming under 5%, maybe this trend higher in euro that we saw to start 2023. I mean, that was a nice run in euro from around 105 where it started the year, all the way up north of 110 for a couple of days. So really important inflation number here coming out of the US this week. But for future inflation numbers, at least until inflation comes under control, a lot of people looking at over under 5% and then trading some of these Forex markets with US dollar involved off of those numbers.